The currency market is making an attempt to recover after yesterday's drop caused by the result of the FOMC meeting. However, the euro and the pound sterling will hardly recoup all their losses. Notably, the Fed's decision to start the tightening of the monetary policy in the near future is not the main reason for a tepid rise in both currencies. The fact is that today the Eurozone and the United States will publish some important reports. Let us take a close look at these events in our video review. Thus, the Eurozone and the United States will disclose preliminary figures on business activity. However, traders will hardly pay close attention to this data. In the Eurozone, the UK and the United States, the indicator is expected to drop. Thus, the report will have no influence on the market. At the same time, the US dollar may resume growing amid the decision of the Bank of England. Like the US Fed, the British regulator may remain the monetary policy unchanged. However, the Bank of England will hardly take measures to tighten the policy, whereas the Fed has already announced such a decision. In recent years, the British regulator has been closely following the ECB's and Fed's approach. Once the central banks take actions, the Bank of England drops hints about the possible changes. Thus, the British Central Bank is unlikely to take a fateful decision. Economists may consider this as weakness that could lead to further depreciation in the pound. Notably, the euro may also drop together with the British pound. The US unemployment claims data may also push the US dollar up. The report may unveil the ongoing recovery process of the US labor market. In particular, the number of first-time claims may decline by 22,000, whereas the number of continuing claims may slide by 115,000. Importantly, the parameters of monetary policy highly depend on the labor market condition. Thus, the current labor market situation allows the regulator to launch the tapering of QE program and raise the key interest rate. Let us take a look at the trading charts. The euro-dollar pair broke the support level of 1.1700 amid high speculative activity recorded yesterday. The technical rebound is likely to be short-lived and may cause a change in the market sentiment. If the price again drops below 1.17, it will slide to 1.1664, the low locked on August 20. At the same time, the pound-dollar pair resumed falling after the correction locked during the period from August 23 to September 14. The decline was mainly caused by the expectations of the Bank of England's meeting results. The support level of 1.3600 is still exerting pressure on market participants, thus resulting in a technical rebound. Although there is a rebound, the downward movement is the main trend at the moment. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.